So a little bit about me, or why the hell am I qualified to be up here? Obviously from my accent, you can tell that I'm American, even though I just had a girl tell me that I seem very European for an American, which I'll take as a compliment, I guess. I was an entrepreneur in the US, sold my first company to Scripps. Scripps is a billion-dollar media company. They own like Food Network, HGTV. It was a back office platform for their e-commerce sites. Then spent 6 months as an EIR at Morgenthaler Ventures in San Francisco. So Morgenthaler was one of the bigger VC firms in the US. While I was there, came up with the idea for the second company, which then after 2 years after that was sold to IAC, which is Barry Diller's company. It's the largest publicly listed e-commerce company in the world. That was backed by DFJ, so after that, ended up going to DFJ in San Francisco. Worked in the early stage team there. Was approaching 30, was getting wanderlust, have family in the UK and France, so decided to come to Europe. It was supposed to be for 3 months, it's now been 4 years. Ended up at Advent Ventures in London, left there earlier this year, have been angel investing, made my first angel investment at 22, about to close 2 more this month. So I am going to give you basically a little practical guide to raising seed capital. So there's my Twitter handle and everything. Email me. Feel free to contact me. I'm quite approachable. So the investor's perspective, team, product, market. Has anybody ever heard the 3 A's rule for having a startup, for investing in a startup? So you want a kick-ass team, smart-ass team building a kick-ass product in a big-ass market. It's the 3 A's rule. So a bit about that, a bit about team and perspective and market. So what am I looking for when I'm meeting with this team? Do I love the team? For me, it's 90% is the team. How long have you guys known each other? What's the tech focus? What's the product focus? For me, those are the 2 most important things. If it's a couple of business guys that come in and they have a business background, they don't have somebody on the team who's tech, if they don't have somebody on the team that's product, that's automatically a very negative signal for me. Is this a potentially kick-ass product or service? Is this going to be something that blows away the market? Is this going to be 10 times better than anything else out there? Because for me, that's the type of differentiation that you need. Will people use this product or service? I've seen some absolutely phenomenal, fantastic product come out, but it's ahead of its time. No one's going to use it. It could look really cool, be really slick, but is there actually a big-ass serviceable market? I had a guy, an entrepreneur in Paris, come up to me, incredibly brilliant engineer. The end market for the product that he was coming up with was about 50 million euros. That's just not a big enough market. And that leads to number 4, how big is the market? You want to be going into billion-dollar markets. You don't want to be investing in companies who are going into 50 million euro markets. The upside there is, unless it's a very specific niche, it's just not going to be there. And do I understand the market? I don't invest in companies that I don't understand. I don't invest in markets that I don't understand. I had come from an e-commerce background. I tend to do consumer-facing investments, investments in consumer-facing businesses, and to me that's important. The deal itself, so you fall in love with the team, you love the product, it's a fantastic market, so what's the actual investor looking for? There's a few things here. Do I want to lead the investment is a question that has to be asked, especially on the seed or angel side. So if you're only willing to put in 100K and the investment's 150K, are you comfortable leading that investment, or are you the type of angel who would rather do follow-ons and let somebody else with maybe more institutional experience or more industry expertise lead that round? So that's something that the investor's wanting to know. And you have to always think about when you're approaching an investor, what are they thinking? What's in it for them? What's the right amount of money to invest? Was just approached by an e-commerce company, raising 500,000 pounds. I can say right off the bat that is clearly not enough money for that company. That company should be looking at more like £1 million. And that might be too big for a lot of angels to look into. How much equity do I take? That's also another question. It comes down to, as much as there's venture math, there's also angel investor math. So what amount of equity are you going to be comfortable getting, realizing that you're going to be diluted down, and most angels don't have the investment capacity to keep doing follow-up rounds. So in order to do that, you need to ask yourself, what's the right venture math for me on this deal? And that's one of the things that investors are asking themselves. Are there comparables? What in the market out there is doing what this business is doing? That works for valuations, that looks for competition, and those are one of the questions you have to ask yourself. And then, what's the exit? This isn't charity. This is, you're in this to make money. So how are you going to exit? Who are you going to sell it to? How quickly is that going to be? And for how much is that possibly going to be? The startup's perspective. So one of the things that Sitar talked about was the fact that you need to do your homework, and that's one of the fundamental things that a startup has to do. So do your due diligence. As much as the investor is looking at you and trying to figure out the answers to all the questions that he's asking, you have to have just as many about the investor. My first company that I had raised angel investments. We ended up with an angel who was an executive at AOL. That guy was absolutely fantastic, made a huge amount of introductions, and really helped our company grow to be the company it ended up being. However, another one of our angel investors was actually coming from a non-tech background, and he was counterproductive to our business. He's coming from a very large corporate background, so he had different expectations of what a startup should be doing. I was just talking to a German startup that had raised angel money. I asked him how was the experience with the angel, and the guy said flat out, it fucking sucks. And I was like, why is that? He's like, well, the guy's coming from SAP. He's used to building, running a 5,000 person division. He has no idea what a 2 to 3 person startup requires. So he's asking for reporting. He's talking to these guys on the phone every week, and he's doing more meddling than he is helping. And that's one of the things you have to look into, is how much benefit is the angel going to have to you. So you got to ask him, what's the result of his previous investments? If you look at a guy and he's coming in and all of his deal flow previously, you can't spot a company that you know of. There's none of the companies he's invested in makes you exciting. If he's invested in a bunch of dogs, well, either he's really bad at picking a winner, or he's really screwing up with the companies he's investing in. Either way, there's going to be some problems there. Get a list of their current investment. What's he in? What kind of deals is he in? What's his deal flow? Who is he investing with? Most angels do in a syndicate. Well, who's he syndicated with these deals with? The types of companies that he's investing in is going to tell you a lot about what type of investor this guy is. Don't go to a guy. If you have a software as a service product, don't go to a guy who is an e-commerce expert and expect him to be the right guy for you to talk to. Ask for contacts at all their portfolio companies. If I'm looking to angel invest in a company and one of these entrepreneurs comes to me and says, I would like to talk to companies that you've been on the board of, companies you've been involved in, I have zero problem making those introductions. You're not going to get along with everybody. Not every one of your previous investments is going to be all hunky-dory. But if the investor is really reticent about making those introductions, about talking to you about portfolio companies, then he's probably pissed off more people than he's helped. How does my startup fit with your investment thesis? So again, if you've got a guy who's more e-commerce focused, that should tell you something. If you've got people who are looking to just do angel rounds with no follow-ons, that's going to tell you something. If you've got guys who are looking to do quick flips, that's going to tell you something. If it's a guy who's looking to do copycats, that's going to tell you something about him, and that's the type of discussion you have to have. The average investor entrepreneur relationship is 7 years. That's longer than most marriages these days. So you really, really have to get along with these people. You're not going to get along with them all the time. Just like in any relationship, you're going to have your... Do you have the right people in the network to succeed? So talking to a guy in France, an angel investor, who invests in a company, the company that he invested in, the network that they really needed was in San Francisco. These particular angels have absolutely no network there. They weren't going to be able to make the introductions. So does your investor have that right network? And how much time are they going to dedicate? Are you somebody who needs hands-on experience with, say, a product expert and want that person as your angel? Or are you the type of person who's just like, look, we're just looking for money and keep keep your hands off and we're going to do our own thing. You have to ask yourself that. It's a mutual relationship. One of the things I see in Europe is a lot of the times where, particularly in more emerging markets in Europe, where the entrepreneur-investor relationship is not balanced. You've kind of got the investor up here, and you've got the entrepreneur coming in with almost kind of a reverential tone. That's not the way it should be. It's a partnership. You're going to be in this 50-50. You're going to work together. You're going to help build this company together. And that's something you really got to remember. Your deck. So Sitar talked about this with SoundCloud raising on 6-slide deck. I've seen guys raise on 3-slide deck. 10 is always a good standard. So 10 slides or fewer. Keep that in mind. I don't want to raise a deck that's 50 pages long, slides long. I don't want it to read like a Russian novel. I'm not interested in that. I want a few pages, a few slides, and get the information from there. So get your intro elevator pitch. You should be able to tell me what your company does in 30 seconds. If you can't, then you're probably doing too much. Just a sentence or two, so I have a quick understanding of what you're doing. The problem, if there's no problem in the market, then no one's going to want your product. And then what's your solution for that problem? And always do a demo. I don't like getting decks and people pitching their companies and there's no demo. I like to play around with something. I prefer a demo 100 times more than just a deck. I actually want to kind of get my hands on it, feel how the product works, what's going on, actually use it. It's far more interesting. The team, again, in an angel investment, that's the absolute most important thing. Don't undersell your team. I remember meeting with a German startup. The German startup came in. I swear by the end of the meeting, I think they were trying to convince me not to invest in them. Be confident and proud of what you're doing. Talk about your team. I mean, if you guys are doing this together, you guys are going to build this company over the next several years. You really have to show how you're going to get along together. Market size, that's basic. It's got to be a big market. Business model, how do you plan on monetizing at some point? Also in here is customer acquisition, user acquisition. Your technology, what makes you special? Competition. Don't ever think you have no competition. Everybody has competition. If you look at search engine, I mean, that pretty much was the competition at the time. In the early days, the late 80s, early 90s, that was going to the library. There's always competition. Key numbers and metrics. One of the things I've seen early stage companies in Europe not do or not focus on particularly well, it is improving, is identifying the key metrics early and letting people know how those metrics are going to drive their business. I mean, business plans are a work of science fiction. Everybody knows it. But it's not so much the actual financials that you put, it's the assumptions that you're making that will tell the investor a lot about what you're doing with your business. How much money? I mean, you should never walk away from a meeting with an investor without the investor knowing exactly how much money you want and what that's going to get you. That's the whole reason for the meeting. That's the whole reason you sent the deck, so that's the most important thing. So be confident, don't be arrogant. I mean, the best entrepreneurs are usually confident, borderline cocky guys, but don't be arrogant about it. Keep it direct and concise. Have support slides. So like you find you got a 5 to 10 slide deck. Have the support slides. When the VC, the angel, the seed investor comes in and says, well, what about this, this, and this? Then you can refer to that deck. Things to do. It's all about minimizing the investor's risk. It's a high-risk asset class, so they're going to try to view the investment in as de-risked a way possible. So first-class advisory board, I see a lot of the times in Europe, a lot of the startups come in and they don't have advisors on their board. They don't have a board, period. You need to have that. That helps show the investor that you've got high-quality people that want to have their name attached to your project. Be visible and engaged. Warm intros. I can't think of a single investment I've ever made that didn't come through an introduction. There's never been kind of a eureka moment where somebody sends in a presentation over the internet email. the generic contact email that all the VC websites always have. I can't think of a single one of those investments that we actually ever made. Build a great product, keep iterating, stay positive. As Sitar said, most of you will fail, and that's the truth. But the whole thing is to keep on going and to stay positive. You have to be an eternal optimist if you want to be a successful entrepreneur, because you will hear far more no's than you'll ever hear yeses, but all it takes is one yes to get you going. Things to avoid. You do not want to have the focus of your time in an early stage startup being raising money. You want to be building product. You want to be building a kick-ass company. So don't pitch the bitch. Just super basic. If you're getting some of these intermediaries that come along with angel groups and things like that, now you need to talk to the people who actually have the money. I get guys coming in and saying, ooh, I'm advising 10 companies who are raising angel money. I don't take that particularly serious. Find out if the investor actually has money. There's a lot of guys who really love to spend their time meeting with startups, but at the end of the day, they don't actually ever put any money in. So find out what's his most recent investment. If you've got a guy who hasn't actually put money into a company in 2 years, find out why that is. Because if he doesn't have money, then you're just wasting your time, and that's time not well spent. You need to be focused on building your company. Quick no, way better than a long maybe. Try to get a yes or a no as soon as possible. If he doesn't give you a yes or a no as soon as possible, consider that a no. Here's one thing that actually don't bother with organized angel groups. That's something that was a bit controversial when I gave this talk before in Paris. I have never seen one of these organized angel groups end up being useful. There's London Business Angels, Paris Business Angels, all these types of groups. You usually end up with, particularly in Europe, a bunch of middle-aged guys who don't have tech backgrounds, who are usually just bored, and they want to meddle. Think about the Google IPO in San Francisco created over 1,000 millionaires, all young, all in the tech space. That same ecosystem doesn't exist in Europe. And the business angel groups, the vast majority of them, in Europe, I haven't found them to be particularly entrepreneur friendly. That's just my opinion, but if you differ, we can gladly have that argument. Don't pay money for advice. I'm on the board of several accelerators in Europe, and I get a lot of these guys coming in who are on the advisory board. And they'll tell me about people trying to do mentoring within the accelerators and then asking for money. You're a startup. You should pay everything with shares and equity. Don't give cash for stuff. That's just not where you should be putting your money. Try to keep the number of investors to a minimum. That's specifically because there's so many tax incentivized schemes in Europe that you get some really strange setups come in. Had a startup come in from France that had raised 200,000 from 67 individual investors. That's a really messy cap table, and that's not the situation you want to be in. And don't give up, seems really strange to say, but don't give up the majority of your company. I do see it happen a lot of the times in Europe. I've seen it happen a lot in Russia, where they come in and one angel's got like 52% of the company or 51% of the company, and that's not ideal. You don't want to give up max 30% of your company. Usually in every round, it's usually between 15 and 30%. You don't want to go above that because you're going to be getting diluted down each round that you raise. Online resources, this is also redundant with some of what Sitar said, but AngelList, definitely get your company on there. The VC blog directory, there's just so much information out there right now that you should not have some of the basic fundamental questions about this process. You've got Brad Feld and Fred Wilson and Fred Deston and all these guys writing just incredible content about the space. It's not like 10 years ago when I first went out trying to raise money and the whole venture capital world was incredibly mysterious. It's actually quite open now. You want term sheets, you check out Brad Feld's post. You want to talk about, what's the difference between a VP in engineering and a CTO? Fred Wilson's got a post about that. There's a lot more transparency in the market. You need to just spend a bit of time on Google and find out that information, and then go from there. Yeah, follow me on Twitter, hook up on LinkedIn. grab me after the party for a beer. Happy to talk then. If there's questions, go for it. I've been fighting a cold, so my voice is about to go.
Thanks, Michael. Thank you. We have a few questions. Martin over there.
I usually prefer Q&A. It's a lot less formal.
We have to keep it like a little bit short because we are running out of time.
Cool.
Okay. So first, thank you for the great speech. I'm Martin from Favorite, and I have two questions actually.
Yeah.
So first, about the problem. What if you receive a pitch from a company that doesn't solve a problem, but in the same time invents one and solves it? So, for example, we have the example with iPhone, the iPad.
Invents a problem. Sounds like the government.
Yeah, like
like bottled water.
Like, see, nobody wanted an iPad until they saw it.
Yeah, no, absolutely. I mean, there's this whole concept of moving the base camp. I mean, so the problems that exist today aren't necessarily going to be the problems that exist in 10 years. You have opportunities that, whether because of macroeconomic issues, demographic issues, problems are going to arise that don't exist today. Actually, a company that I'm looking at, it's online platform for services for immigrants and migrant workers. There's big trends pushing in that direction, so it's a market that's going to be vastly growing. So if you've got an aging population in Europe versus a young population in, say, North Africa, where 40% of the population is under the age of 25, those economies aren't going to grow fast enough to give jobs to all those young people. So the migrant section of the economy is just going to become even more important. And then, yeah, definitely, if there is an opportunity, if there is a problem in the market that's going to be in the future, yeah, it has to be considered.
Okay, and the second one, how do you ensure that the great team, like the main component, remains the same throughout the whole process? So, for example, if there is too much pressure on some of the teams, or just somebody decides, oh, I'm just going to quit, it's going to not speak good about the business. So, is there some leverage that you have, like some process that you say, okay, guys, you have to stay until the end, or you have to inform us, or have you such experience, and how you acted in a case like that?
So I think what you're saying, how do you ensure that the team stays? I mean, there's always clauses in that, and then the earnouts are involved, and you have to stay a minimum amount of time within the company in order for your options to vest.
Yeah, at least the founders. I mean, you invested in them, you will expect them.
Yeah, look, I mean, I think that the absolute best startups are always the ones that end up being run by the founders. You absolutely want them to be there, and it's part of the due diligence, it's part of the homework that an investor has to do, is to make sure that that team is really in it for the long run, and go from there. And the whole key thing about investor-entrepreneur relationship is you have to have that line of communication constantly open. I know that some people always insist on having board seats and things like that. I think rather than a board seat, the most important thing is just the entrepreneur knows that he can call you up at any time and have an honest conversation. Because the whole thing what you're looking for in an investor is a sounding board, somebody who can bounce ideas off of and get real honest feedback from. I think that's the most important thing. That's more about open communication than it is about formality.